Are we, in your judgment, in a moment in which the world order is going to change?
Yes, we're changing the world order. Okay. In 1945, we started the New World Order. What I mean is, throughout history, there's a fight for control because there's no world court that you go to and plead your case. And so there's a fight for power. So there's a war, and then the winners come out of that war, and the winners set the rules. And so 1945, the United States had 80% of the world's money. Gold was money at the time. It had half the world's GDP. It had a monopoly on military power. So the U.S. set the world order. That's why the United Nations is in New York. Washington, D.C. has the IMF and the World Bank.
And its currency became the reserve currency.
And its currency became the reserve currency because of that set of circumstances. Okay, things evolve, things change, okay, over history. So the three big things that are changing now that haven't occurred in our lifetime is the amount of debt and money creation, which affects the value of money, and you could see it affecting what's going on every day.
Large debt means the printing of money.
Right. The large debt puts central bankers in a choice. Do you pay it back with hard money, or do you pay it back with printed devalued money? And if you pay it back with hard money, it's hard. In other words, that's when you have debt crises. So in all cases, they eventually print money, and that produces inflation, right? So that dynamics, the first...
And that's the place we are at this moment.
That's the place we are at this moment.
Okay.
And we'll talk about that.
We'll drill down on that
in a minute. The second is when there's a great internal conflict, usually when there's a large wealth and values gap, and at the same time as you have a financial problem. Then you get populism of the left and populism of the right. In other words, those who feel disenfranchised want people who are going to fight for them. They don't want compromisers. They don't want them to be in the middle, because middle means that they're not fighting for them. They want them to have guts. So that you have populists of the left and populists
and
of
their
the
positions
right.
harden.
And their positions harden, and there are no compromises. That's why we're potentially in a situation that you could see in one of these elections, maybe in 2024, that neither side would accept losing. Perhaps we see that. Maybe you don't follow the rulings of the Supreme Court. Anyway,
that's a serious question today.
So these things have not happened in our lifetime, but they happened many times in history. So if you look at that, you see from those patterns why the gaps become greater and the positions harden, and you see the dynamic. So that's the second. And the third is the rise of a great power to challenge the existing great power. In other words, I gave you the example of how the United States was so dominant in 1945. Now it's not as dominant. It is not dominant. In other words, China and the opposition is as strong as the United States and its allies. And so we have a conflict. And there are 5 kinds of wars. And they start in this order, just sequentially, typically. A trade war, a technology war, a geopolitical influence war. Then you get into a capital and economic warfare, which we are now with sanctions. They always happened in history. And then there's a military war. And so you could see that progression happen through time. And that creates a template. So I like to look at the template and then plot dots to see how we're transpiring relative to that template.
Should Janet Yellen have seen this inflation?
I think she should have seen this, yes. I think that there's a tendency to look at the economy in a rear view mirror and seeing low levels of inflation and also not understanding monetary inflation. There are 2 types of inflation. There's an inflation when the demand is pressing up against the ability to produce. And so we had that kind of inflation. Unemployment rates go down and there's a limit to the capacity to produce. There's also a monetary inflation. And a monetary inflation means, very simply, if you produce more money in credit, if that increase is greater than the production of the goods and services, prices will go up. And what that happens, it creates a spiral, which we're seeing now. In other words, the selling of bonds. So it makes the imbalance become greater because not only do you sell the bonds to pay for the deficit governments do, but holders of bonds choose to sell bonds because they're not producing a good real return. Now, that just mechanistically may be a little bit tricky for some people, but what that means is when you have a big supply-demand imbalance like that, either interest rates have got to go up to curtail that demand, or the central bank has to print more money, and they always print more money. So that dynamic of monetary inflation, the type of thing that makes the 70s, or the type of thing that makes inflationary depressions like happened in the Weimar Republic in Germany in early 1920s, that kind of inflation I don't think is paid enough attention to.
What causes it to lead to recession?
Inevitably, there's a certain amount of debt that has to be paid. And one man's debts are another man's assets. And the more debt you have, the bigger the problem is. And so when you have a lot of debt and you have to pay it back, you're either going to pay it back in hard money or you're going to pay it back in depreciated money. And that becomes the choice of the central bank. That's why you get stagflations. That's why we have an environment like we have now.
Are we close to having stagflation?
Yeah, we are in stagflation.
We are. Stagflation is simply where, you have inflation, and yet at the same time, you have high unemployment.
Yeah, you have economic weakness.
Right.
In other words, you have a stagnant economy. Essentially
meaning growth is reduced.
Low growth, and with high inflation. And that happens through this monetary situation that I'm describing, in which the central bank tries to deal with a middle course. In other words, what does the central bank want? Not too high inflation and not too low growth. And so when there's a lot of debt, because one man's debts are another man's assets, it becomes very difficult balancing act. And that is when you have stagflation, when you produce it. So just like in the 1960s, late 60s, we spent a lot of money on guns and butter, we called it,
right.
The Vietnam War and social programs and so on. We wrote too many checks relative to the money we had in the bank, which was gold at the time. 1971, the devaluation. Then they print a lot of money into that stagflation. So stagflation is is the middle course when there's two different.
So the Fed and Jay Powell has a balancing act that he has to achieve in order to try to ward off a recession.
Right. So think about it this way. How does he literally fight inflation? Because everybody says tight money policies, and how do you fight inflation? Well, the way that happens is you get people to spend less by taking money and credit away from them.
Right.
So he will reduce the amount of money and credit that's available. The Federal Reserve is going to sell $1.1 trillion of debt that it has, debt assets, bonds. Right. And then they're going to raise interest rates. So they create a squeeze that reduces demand at the same time as people don't have enough money because inflation is high. So that squeeze,
and their buying power is less.
That's right, because inflation is high, the buying power is less. And then what that act is to reduce buying power again, to reduce inflation, but it comes at a big cost, and that is stagflation.
Is the United States in a unique position because the dollar is the reserve currency of the world?
Of course, it's the unique privilege. It's, in fact, really the only really unique power of the United States now. The military power.
It's the only unique economic power of the United States.
Only unique, really most important power of the United States. It's the only unique power of the United States. I mean, of course, we have a legal system and we have other things that are good. But I'm saying, if you now look at the United States, it's no longer dominant militarily. It's no longer dominant economically.
Because China has become
comparable.
And it's becoming even more so.
Right. And it's a larger trading partner with other countries than the United States is, the amount of trade and so on. It's a very unique power. Think about it. You can print the money that the world will accept. Now, that means when they accept it, they buy your bonds. They buy your debt. That's what they hold these in, which are promises to receive this currency that you could print.
Right.
So there are two things now that are jeopardizing that position. Dollar's now strong, but there are two things we want to hold on to that position. Two things that threaten it. The first is the printing and devaluing money, but all countries right now are doing it. So in all countries, currencies are depreciating against goods and services prices. And then the other issue, which is interesting, is the weaponization of the dollar in the form of sanctions.
The dollar is no longer the reserve currency. What is likely to be the reserve currency of the world?
This is the question. All currencies, usually during these period of time, depreciate together. So in the 1930s, all the currencies depreciate. They depreciated then against gold. They depreciate against assets, against real estate prices and a number of things. But we're coming into a new world in which the real question is what will be the new currency. And it may not be just a government currency. There's questions of, is it crypto? Is it gold? Is it other things? And we'll find out. I think the elements of a currency are important to keep in mind when we go through this checklist. So a currency is a medium of exchange, and we'll have all of those currencies continue to be, including the dollar. But it's also a storehold of wealth. And that means that the bonds or what you store it in has to have a real return. And none of the major currencies have that. That's why you're seeing movements out of all of those and into other assets, and why you're seeing the bond market sell off.
China holds a lot of American debt.
Yeah.
Should we worry about that?
I think they should worry about it more than we should worry about it.
Meaning?
They won't. I don't believe that they'll sell the debt. And if they sold the debt, we would, again, like others, we would just print more money and it would depreciate in value. I think that they know, and have known for quite a long time, that the position that they have in that debt is something that they're going to have to stick with.
It created simply because we were buying all of their goods.
That's right. The way it worked is they produced inexpensively. We all thought this is a good thing. I thought it was a good thing. They produce inexpensively, and they earn money. And then they take a lot of that money that they earn, and then they lend it to us. I remember when this started, the per capita income in the United States was 40 times the per capita income in China, and they're lending to us. So we borrow this money, and they buy our bonds. And I don't know who got the better or worse deal, but anyway, that's what happened.